Good afternoon, everybody. Welcome to TraderMerlin Show. It is your Monday edition, the 20th of May today, rocking through our trading year, a pretty eventful one. Good to have everybody with us. Hey, Joe, good to see you. Good to see you, Sue, Gachio, Tomasino, Ricardo, and I'm sure many others will be joining us here shortly. Les, where are you, bud? You're usually the first one in the room. What happened? You're slipping today. I'll obviously dive into today's markets. I'll recap some of the things that happened with regards to my portfolio over the weekend, and then we'll do that at the end of this. But I'm going to start off with what we discussed last week. So there was a question that came in from, let's see, who was this from? It's a tough one for me to pronounce. I still don't know if I can get it right. This is from Psych here. I'll call it Psych here. Psych here says, could you do a show where you explain the opening range breakout strategy that you used today? Well, as you guys may recall, last week I was waiting for these markets to roll over. So I normally don't like to get up early. I used to be a morning trader. I really hate mornings. I'm nocturnal, so I usually stay up late. If there's something going on, like an event, a particular news release, economic data, earnings, then I'll make an exception and get up every now and again and make the early one, which is what I did kind of the tail end of last week, Thursday, Friday. Had to kind of be there and be ready for what was going on because I was expecting these markets to roll over and I thought we'd see some good opportunity at the downside. Well, what really happened is we didn't even get that downside move. Matter of fact, it was pretty much bullish. So the strategy that I was using that one particular morning, and I mentioned that on the show, is called the opening range breakout. Some people call it the ORB or ORB. And, you know, I mentioned that, and of course, Psych here wants to know more details about it, and I'll explain what some of the basic framework ideas of it are. But I want to go one step further than that, and I want to kind of explain why this is so important and why I believe something like the opening range breakout works. I know a lot of people are like, oh, this strategy doesn't work, that strategy doesn't work. Look, I think that they all work if used correctly. Now, what I want to do is show you a simple example of, again, it's a parallel as to why this strategy, I believe, can benefit many of you out there. And it has to do with rules and having ground rules and framework for what you're doing. So let's go back to something that many of you might be able to relate to, which is building a home, right? If you said, I found this plot of land, I bought it, and I want to build a home, here are some of the steps on how to build that home. And I know we have a bunch of podcasters here, so thank you for all that listen to podcasts regularly. I appreciate it, and I will read all the pieces on the screen right now. So you bought that land, you got everything cleared away, and you're like, I want to build my dream home. Great. You know, it's not as simple as just, I'm going to start building. First, you got to prepare the site and lay the foundations. And above all of this, I would say there needs to be plans in place. So as we look at each one of these steps, there's 10 steps on the screen here. Each one of these steps will have a plan for it. For example, we're laying the foundation. Okay, I can't just pour a foundation and build on top of it. I need to know where to create the points for the anchor bolts to go. I need to know where the drainage lines are going to go into the foundation and where they might exit out to attach to city sewer or things like that. Also, electrical. Where's the electrical come in? How does that all work? Step 2 says build a rough framework, right? So once I've got the foundation done with the vision of this overall home being built, I know what I'm building. I can see the picture. I got the diagrams. I got the mock-ups. I got the CAD. Then I lay that foundation, I build a rough framework, right? That's your skeleton of the home. And that, of course, is all by plan. You don't just willy-nilly it and say, oh, I'll put it here, because certain points of that home will have different qualities of structural integrity, meaning that if I decide to have my ground floor, just one let's say I'm doing a 2-story home, and I want to build a 2-story home that's 3,000 square feet, 1,500 square feet per floor. And on the bottom floor, I want to have 4 walls and a giant open space. I want my downstairs to be nothing but a gigantic entertainment room, a living room. I'm going to have the kitchen in there with a little island and all things like that, but only 4 walls. I can tell you right now, there's no way that would pass code because you can't build something 1,500 square feet knowing there's a second story and not have load-bearing walls, supports in the middle to hold all that up, right? So without a plan, this whole house is going to come falling down in no time. So we build the rough framework according to the plan, and of course that requires engineers to make sure that everything is done correctly and is safe to carry the load of a second story. Then you put in the plumbing and the electrical. Now, this isn't the final, outlets. This is just the main dropping all the Romex and all the cables and all the plumbing to where it needs to go. If you did that after you put the drywall on, this whole project is messed up, and it's not going to work. So you put the plumbing and the electrics. Step 4. put the insulation in, right? And there's, of course, many different types of insulation we could use, but I'll move quickly here. Number 5, you finish the interior walls, right? Put the drywall on and start the exterior of the home. It says, number 6, finish the interior touches, drywall, install driveways and paths. So now you're doing the hardscape on the outside, which of course is all done according to plan. And what's nice about this step here is it's that first real transition where you can have multiple teams, one working the outside, one working the inside as well, and move even faster. 7, fit the hardwood flooring and countertops, finish exterior. And maybe it's carpet, maybe you got some fancy flooring, but at least you've got all the heavy lifting done, so you don't need to worry about scratching the floors. That's why the floors go in. Install bathroom appliances, step 8. Step 9, put in mirrors, finish the flooring, landscape the exterior, and step number 10 is the final confirmation with the builder. Okay, now you're like, Merlin, you just wasted the first couple minutes here just talking about building a home, and I feel that the reason this is so important is it's all steps. If you follow these steps with a plan, your house may still have some problems, right? There may still be minor details that arise that could be problematic. But for the most part, you're going to circumvent any egregious errors. You're not going to build the house the wrong way. You're not going to miss a step on the foundation because you followed the plan and you did them in the right order, so you don't have to go back. Margaret said, I've done none of these. Wait, you've done none of these? Did you build your own home, Margaret? I would say I'd love to come visit, but now I'm nervous. If you build a home and you didn't have any of these steps done, you're in trouble. Whoever built your home followed these steps, right? And that's why you and I can go and live in the homes that we do, because at every step of the way here, there is somebody from the city or the county coming in and verifying that these steps have been taken and everything is okay. Bottom line is, it's all a process. Lisa says, I built 2 houses with my ex, would love to build one more without him. It's fun, isn't it, Lisa? It really is fun. I mean, it's like giant Legos for adults. It's just a lot more money. But the end result is fantastic. You get to live in something you created. I was very fortunate when I was younger. My friend's dad was a general contractor, and we built some homes together. And I drive by today. Still, I'm at these houses I built 35 plus years ago, and I'll drive by those and go, yeah, I built that. That's still standing today, and someone's been living that for years. So pretty much fun. Okay, so that's the steps of building a home. And I just, again, put it in there because it does put in the framework and the guidelines of what you should do to make sure that what you're building is not a failure. Now, this is nowhere near as detailed as the graphic I just got here. I took this from someone on social media, this one right here. That was just taken off of some Google page, which I thought was a nice, simple step-by-step part. So let me go in, and I need to change my animations here real quick because I wanted to come on revealed for you, and we'll do those all on click. So here is the orb, or opening range breakout. Okay. I try to keep this as simple as possible. I know I can make it much more complex, and maybe if your questions come through, we can add that into the discussion as we go here. But step number 1 is actually the simplest one, and that is find a security that has the trading characteristics that you're looking for. I know everybody's going, well, my characteristic is I want to make money. Well, remember, there's liquidity issues. So if you're trading the opening range breakout, you have to know whether that security meets a couple criteria. Number 1, does it have enough average daily volume? Right? If it trades 1,000 shares a day, forget it, move on. If it trades 100,000 shares a day, in my opinion, move on. It's got to be, for my taste, 1.5 million. And the only reason I say it's got to be 1.5 million is there's sometimes where I'll find myself trading 2,000, 3,000, 5,000 shares of something. I want to make sure that it has liquidity for me to buy and sell those shares without having an impact on the market by myself. So that's really important. So you can look that up on average daily volume. What it does also is once you get above 1 million shares, the spreads get a little bit tighter. It doesn't mean that they're super tight, but they're not going to be these really wide spreads that you see on some of these penny stocks that have no liquidity. So I get 2 big benefits by having higher volume. I get tighter spreads and easier access to buy or sell my shares without creating slippage. So to me, that's really important. I think that's absolutely critical. Now, you can bump that number even higher. Remember, there's thousands and thousands of securities to choose from. It's not about finding everything. It's basically run a filter, dump all the little garbage out of the way, get rid of it, and then focus on stuff that actually moves and has liquidity. So first one is I've got that volatility and movement that I'm looking for. The next piece here, when you say characteristics, is I'd like to see an ATR so it has some range. Give it maybe $1 a day, something that actually moves. If it moves 5 cents a day, not a lot of opportunity there. Now, that second step is easy. Wait for the first 3 5-minute candles to form. This is tough because for many of us, we get impatient. We want to jump on the trade. We see things moving. You're like, oh, this is it. Here we go. And you don't want to wait. This is like you got to build the foundation before you build the walls, right? It's that you have to wait for one step before you wait for the other. So this is an easy one to say in practice or in theory, a very difficult one to apply because it's going to really pull at your emotions. You're going to have different emotions tugging at you when you go through this. So for today, for example, let's go to SPY. Right, so I love doing this. Opening range breakout for me is great on pretty much any of the spider ETFs. Any of the major index futures contracts are good as well. Do you use hotkeys for a quick in and out trade, such as I do not. I used to use hotkeys a lot, but yeah, not anymore. I'm much slower than I used to be. Let me take that back. I'm not slower as in my personal speed has gotten lower, but my preference is to trade a bit more slowly because when you trade an opening range breakout or you trade that opening part of the morning day, you get drawn into making a lot more trades. And then, it doesn't really cost you much in commissions today, but I come from a generation, like I sound so old, that, I'd have to pay $10, $15, $20 per transaction. So for me, I always have that in my mind if I don't want to do a lot of transactions, even though today most stock trades are free. But I don't use hotkeys anymore. It's kind of sad. I loved using hotkeys. So here's an example of, we'll just go SPY, and I'll bring this up to a 5-minute time frame. Okay, so there you have, this is today, well, here's a couple days worth of trading activity, and I'm going to take this off. This is regular trading hours. That's great. We will put a vertical line right in the open so everybody can see exactly when that was. Why is this? Oh, okay, there we go. There's 6:30 in the morning. So there's your open, right? That little... nope, I'm sorry. That's opening from a couple days ago. Jeez Louise. So what do you get here? Bam, opening is right here. Bam. Okay, there's your opening for today. So on this one, it's fairly simple. That's one bar, right? You can see you've got this, where the cursor is on is one candle. It's 1, 2, 3. So here's a 15-minute. And some of you are going to ask me, I know it's going to come, is why not just use a 15-minute bar? Why don't you just use a 15-minute candle? Because I like to see the candles form. Simple as that. So let me get out of this. I will show you the next step, which is really simple. Map out the high and low for that range. Does it get any easier? No. We'll go over here to my drawing tool. Doesn't matter what platform you use. And I'll say, okay, there's your high for the opening 15 minutes, right? Is this right there? There's your low. And all I've done is now mapped out the high and low for that opening 15-minute range. And just to make it more Merlin-esque, I will put in a little yellow box. And basically what I'm saying is in the next bar, so here, let's zoom out, and this is what we'd be seeing in real time as the market open, right? So there you got the last 3 candles on your screen on the right side of the page are your 15-minute window of time. That's the 3 5-minute bars. And all I've done is map out the tippy point there and the low point. So great. At this point, I don't care what the market does. If the market stays inside that yellow box, I don't do anything. I just leave it alone and be patient and wait. If it breaks above the upper range of that box, and in this case, I can't see the numbers on there because it's hidden underneath this. In this example here for SPY today, it was $530 and a quarter. So $530.25 was that high point there. So all you're waiting for is a break above that. Notice the next candle started off a little bit lower and then started to rally up through that high. Okay? The reason this is so important and simple, and I think a good learning lesson, is it's a very specific, simple set of rules. If that security on the 4th bar, whatever it is, stayed in that yellow range and did nothing, don't do anything. At this point here, in this point of the day right here, I could go to these upper and lower lines, and I could actually set alerts. I could place alerts right here and say, hey, if it gets above here, I'll just go here, alert name, above, I'll just go above the 15, okay, and then I'll go double click this one down here, and I'll add an alert right here that says below. Oops, goodness. Let me put that right here. There's below 15. So now I can have it where it will alert me and pop up on my screen a little alert that says, hey, it's below the 15 or above the 15 if it gets out of that range. So I don't have to sit here anymore. Now, granted, when I use the opening range breakout strategy or orb, I am typically a day trader. I'm looking for short-term intraday momentum swings, which is why I like the 5-minute time frame. So that makes it simple for me. Then it breaks, and now there's your trade is on. At this point, it's really up to you on the management side of things. I will tell you a couple little ways you can manage it, but today was a great day for the opening range breakout. If you trade the opening range breakout, it was fantastic for about an hour trade. Right? And then what do we get? We got sideways action and gave it all back. So it's really a short-term momentum trading strategy that I personally think works great. And that one paid off for me very well last week. Didn't make any trades on it today, unfortunately, but is what it is. So that is the gist of it. I had one more thing to add to this one, which is wait for the breakout. Now, when you are in it, the question always comes up is, how do you manage that trade? What do you do with it? Well, and that's something that is going to be particular to every person. You're all going to do it in different ways. Some of you might be using a percentage of ATR. I like to sell half of a position if it gets to a specific percentage point. So for example, if the daily ATR, let's say, is $2 and it moves $2 out of that breakout, I'll sell half the position and trail the second half because I feel like it's already gone enough to meet its daily ATR range. It's moved enough. Let's see. What does the future says? Hotkeys for day traders. So you could set it up, and I actually have old keyboards here where all of my keys were, not all, but many of the keys on my keyboard future were designed to perform a specific function. And you got to be real careful here. So for example, F1. So my function 1 key, all I have to do is tap that. This is back in the day. I don't use it anymore. But F1 would be place a limit order to buy at the bid for 500 shares. All right. If I hit F4, it was buy at the ask 500 shares. If I hit F3, it was offer at the ask. And if I hit F2, it was sell short at the bid price. So I could, in one button, hit it and it automatically would send an order. For most people, they struggle with order execution. It's slow, it's cumbersome, right? I got to go find my cursor, make sure I got the right symbol, put in the number of shares or contracts or lots. Then I got to make sure I have the right order type, make sure I got the right price, the right quantity, and then I have to go hit that submit button, hope I didn't mess up. Don't forget your time in force or duration of the order. So a hotkey allows me to execute a predefined amount of a security in one button stroke, which is awesome. If you are someone who wants to be more of a high-speed day trader, more active, hotkeys are great. However, it becomes a video game sometimes. You wonder, like, Merlin, how did you average 550 trades a day? Well, that's because I had hotkeys, and I was just literally going boink, 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 and I just made a ton of executions right there. Each one of those cost me money. Now today it's a lot better. Your trading platforms usually don't charge you for stock transactions, which is great, but you still are paying for options, still paying for futures, still paying for Forex and things like, depending on what your Forex broker is like. So that's what the hotkeys piece represents. So in a very simple explanation, that is that opening range breakout. And I believe that it works for pretty much any market. I think you can work on any asset class there. I personally like it with equity markets. I like it with the futures, but I'm generally going to be doing it off of the underlier. So for example, if I'm looking at the S&P futures, I'll still trade it the same, wait for the market to open. But remember, the S&P gives you a false sense because it's got pre-market activity, whereas typically stocks don't. I like to do them on the equity pieces because it's that floodgate of euphoria comes surging in right in the open. And a large part of why we map out that opening 15 minutes is what goes on in this little 15-minute window of time. Remember, hey Chris, good to see you. Hope you had a good weekend. And Obioma, welcome. When you read the news this weekend and you're like, oh, well, such and such happened, or the Iranian president was killed, or whatever, some war was kicked off, or something good happened, there's a large contingent of Americans that will put orders in over the weekend. Oh, I want to buy this stock on Monday morning, or I want to buy this tomorrow or the next day because of some news-driven event. those orders don't get filled right away. They get sent to the respective broker dealers. Remember, let's say, for example, you're a Robinhood trader, okay? So you're at Robinhood and you read this story that says Donald Trump is going to win the presidential election in a landslide, and he's going to do, really good things for the economy, and it's going to soar. And you're like, wow, this sounds great. I'm going to buy a whole bunch of stock. So you come in that next morning and you put buy orders for a whole bunch of stock on Robinhood. Robinhood's not going to execute that. Robinhood's going to take all these orders that have come in, and they're going to sell it to somebody, most likely Citadel or a couple other big firms who pay for that order flow. So your order flow now gets sent to them, and they own that order flow. It is their possession. They can do with it what they want within certain regulatory guidelines, but they will take those orders. And of course, let's say it's Citadel. Citadel has objectives for their own portfolio, what they're trying to do with their positions, and then they have your orders. So they may use your orders to achieve their financial goals or their personal goals, but your orders will typically be processed on the open. So you get this, 10, 15-minute window of time where those orders are being processed, and that creates the big swings in the morning. A lot of undue volatility, not undue, but a lot of volatility right on that opening 15 minutes. So what you're really saying is, my good analogy would be, it's Black Friday at Walmart, and the people who are there in the very front get trampled, they get beaten, it's a mess. And do they get the good deals? Could they get the good stuff? Maybe. But they could get beaten up in the process for what? For a little gain. You wait that opening 15 minutes when all the mayhem has kind of slowed down a little bit, and you can walk in the store, not worry about being trampled, and maybe get some of the deals that are still there. To me, that's the same way of looking at this. You can jump on the opening bell of any market, but you don't know where it's going. When we let something filter through those orders, and then say, okay, we've now let that opening 15 minutes go. Now the market may start to take a clearer direction, and typically this is where you get nice trends form. Now, we know that the markets aren't always a trending environment. Sometimes they're real choppy and erratic. Other times, they're just flat to sideways. Well, today was a good example of that momentum did carry on for about another 30, 45 minutes before it really stalling out. And I think at this point here, if you were, let's say you trade that opening range breakout, and we're now this far into the trading day, another, an hour in, you realize that, well, it's not really moving much anymore. I'm going to just start to move my stop losses up so I don't give any back. As you saw here, it ultimately did give back almost, did it give all those gains back? Yeah, it did. Gave back all those gains. So, yeah. Tom says, I know someone who has traded SPX Orb using credit spreads and documented for over a year. 85% win rate typically out of, yeah, right? And Tom, would you agree? And I think this also goes back to how you trade, Tom. You try to get to that point that it's systematic. I'm willing to bet you that he has very specific rules he follows on pretty much every single trade he makes. And that's the point of why I believe a strategy like this, at its most fundamental level, its most basic level, is a strategy that pretty much anybody can do, and with good risk management, be successful, right? The kick in the teeth here would be, you've got this trade setup, right? And you're waiting for it to move outside of that yellow box. It's either going to go above that box. You have three choices, right? There's nothing it can do other than go up, go down, or go sideways. I can guarantee you that every single stock will do one of those three things every single day. It's the only thing I can guarantee you. So in this case, we were fortunate. The next bar was up and broke out. Great, take the trade. But what you can't do is you can't put your stop loss, way down here below the box's range, because it's just too big of a stop loss. So you have to be a little bit more, a little closer with your stop losses early on. I like to use ATR to help me calculate that out. But it's really about making sure that if you are in that momentum, that breakout that happened here in 20 minutes into the trading day today, that you move your stop loss up and take profits along the way, and don't let it give back to you. Now, what I like about what Tom says, and this is kind of my philosophy as well when I was using this as a pure day trader, is they'll go into the market and say, market's open at 6:30, I'm trading till 8 o'clock. So no matter what happens, I don't care about any of this stuff to the right of this vertical line I just drew, because I'm out. I'm closing the trade. I'm going to move on. I'm going to be done. Andre says, when do you take profits in that strategy? Again, that's up to you. I like what Tom said here, because this is kind of how I did it. The maximum I would stay in when I was my quote-unquote 90-minute trade. Oh, excellent. Great. Good for her. The maximum I would stay when I was a real active day trader was 90 minutes. I traded the opening 90 minutes of the day, and that was pretty much it. Now, I did trade on the opening bell because I was one of the faster executors you'd ever see. I mean, I was incredibly fast, but it's stressful. It's high risk. I wouldn't recommend it. That's why I love the opening range breakout strategy. Opening range breakout is ORB. ORB is opening range breakout. So what Tom's saying is she's just bringing up the SPX, doing credit spreads on those, trading that opening range breakout. Great. And again, rules, man, rules. That's why I wanted to go and bring up that picture of the house, this one of the house building today, because this is really what it is. You know, for us as traders, how does a home builder build success? They build great homes that people like, and they have a good reputation. How do you do that? You follow a specific set of rules here, and it's just boom, 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 step by step. Now, granted, within each of these 10 steps for building this house, there's a lot of little details. This is obviously high level, and I would say that the opening range breakout strategy, which I've kind of mapped out my 4 simple steps here, this is just a framework, a guideline for you. I think the most important part is that you are finding something that moves and is liquid, and number 2 is you're waiting that opening 15 minutes, right? Could I change this chart and say, oh, I'm just going to go look at a 15-minute time frame? Sure, you could. There it is right there. So it's just this one bar. But I like to see the 5-minute time frames. It's just a matter of personal preference. You guys can do it however you like. I like this because I can see the big move up, the hesitation here right as we came into that 20th minute of the market, and then, had the nice breakout there. Her rule is when the loss hits 2 times the credit taken, she's out. Great. And for everyone here, let's make this not be I got to trade the opening range breakout strategy. Whatever it is you decide to trade, whether you're trading supply and demand, you're trading the shaken oscillator, you're trading MACD, ADX, CCI, Brandon Wendell's moving average crossover system, whatever it is, you should always have the rules written down for whatever that strategy is, right? How does it work? How am I going to use it? How am I going to optimize it? How am I going to review my performance to make it even better? And then you map out those step-by-step rules so you never do something out of the ordinary, right? When I see someone that tells me that they lost a bunch of money trading the open and they tell me that they're a 15-minute orb trader, it's like, well, how could you have done that? You wouldn't have lost because you're waiting 15 minutes. You broke your fundamental principle of it. Now, could you wait longer, 20 minutes, 30 minutes? Sure, of course you could. However, most of volatility is out in that opening 15 minutes. The longer you wait, the more you're kind of chipping away at your trading day. Plus, you usually get nice moves that happen in the morning. You don't want to let it all sit on the sidelines. And some people here would probably be thinking, well, Merlin, look how big that opening green bar was. You just let that go away. That was just wasted time, wasted money. Yeah, it is. I'd much rather let that happen and form and let the chaos of the opening 15 minutes pass and then jump into something that's a little bit calmer and gives me a higher probability of moving in my direction. Flag breakouts work well in the first 30 minutes of the trading day. I would say it's a similar situation. If I brought this down to, let's say, a 3-minute time frame, you could say, oh, well, there's a flag trade. You have a bullish flag on the open, right? You got this from yesterday's closing bar, the first, 6 minutes of today's trading. Then you had 9 minutes of sideways in the breakout. So, yeah, similar, right? Again, Margaret, it's whatever the rules are. Make sure, whatever strategy is, you have rules in place. And since somebody asked, I figured I would explain the very basics of this. Again, the stop losses, the targets, that's all going to be based off, typically, the supply and demand zones that have formed in the past. So we look back here. If you're looking at this breakout on today's session, as it broke out, I've got 2 primary targets. I did not trade this today, just so we're clear. But had I trade this breakout, I'm looking at, for me, I got 2 potential targets, and not probably going to be those there. It actually hit them today and then reverse from it. So nice targeting at 531.43 on the SPY. So the other thing you can do here is, if you are trading breakout patterns like this, right? This is the opening range breakout. Once it breaks out, a lot of people will use the top of this yellow box as a demand zone. So if price is above it, it's broken out above it, and then comes back down and retests, a lot of people will trade that as a next logical bounce point. But usually I'm not in it long enough to let that happen. Did it bounce off it today? Let's see. No, not really. Didn't get the bounce off. Slightly, but not that big of a deal. So there you go. That is your opening range breakout trade setup. I hope that that was helpful to some extent. Again, I'm not here saying you all need to be trading the opening range breakout. Matter of personal preference. We all have different strategies. Like Tom and Margaret are talking about different strategies. Great. I personally think that any strategy can work as long as you have good risk management in place and you go through and you find out the variables that are going to offer you the most risk. So let's say, for example, you're using a moving average crossover strategy, right? Whatever, who cares? Moving average crossover strategy. If I look at the first characteristic here of the orb strategy, it says find a security that has the trading characteristics that you're looking for. Well, in that moving average crossover system, I'm still going to have that same basic premise of I want to make sure it has liquidity. I want to make sure there's enough trading on a daily basis on that thing so I don't get bad slippage. I want to have tighter spreads and just better security overall while trading it. That's going to be the same on pretty much any strategy for me when I'm trading anything. So that's your basic framework for it. Now, once I have the moving average crossover strategy, now I start to map rules around. Okay, I will go one bar after the short term crosses above the longer term. I'll wait for the close of that bar, whatever the rules may be. It's all about setting those rules and sticking to them. Now, for those who are new, you want to constantly be looking back at your strategy, like what's working, what's not. Could I wait one more bar and let's try trading that and see if I got better results? Because everything in the markets work until they do not. And if you sit on your laurels and you say, here's my strategy, I will use this forever and it's never going to change, you'll find your performance will degrade or improve over time depending on what the market does, right? There's times where a breakout strategy doesn't work in times of calm markets. When markets are kind of choppy, going boring like they should for the next couple months, you might not get great breakout moves. When you get to the more volatile months, get into September, October's, some of the holiday rush stuff, you could get really wild swings, and these breakouts might give you better rates of return. So it's knowing the environment that you're playing in, as Sun Tzu would say. You got to know the environment you're playing in and know your enemy and how they're thinking. All right, questions. Anything you want me to go over that orb? If not, I will go on to a couple other questions that have come in, and then we'll look at our markets today. I'm happy to be wrong with crypto, as you may have noticed today. We had a nice move up in Bitcoin. It actually is a pretty important one because it broke through some key levels. But what are the questions you guys have? Let me go to a question that came through from another viewer on There's two things here. One I don't quite understand, and I will read this one right now. This is from William. William says, also, how do you focus on trading, learning how to trade in the backdrop of turmoil? When you are being sued under the gun of lawsuits, the risks of being kicked out, and it can continue a situation of having to stand your ground. In that situation of what's my legal strategy should be, how do I undermine my lawyers, their lawyers, how do I block and prevent from trying to sue me again? It sounds like you're in litigation because I've never been sued before. I haven't given anybody reason to sue me. I'm sure some of my comments may think that someone has grounds to, but when you're speaking facts about people, they can't sue you for that. So I know somebody was giving me grief for my views on Sam. Well, just read the legal documents. I think it's pretty clear. But anyway, let's take a step back because this has never been an issue for me, but I have certainly had problems, external events, pressures, whether that maybe someone close to me has passed away, which has certainly happened in my trading career. And how do you deal with that? If you have a plan, like we just talked about with building that house, and here's the steps I have to take, then external factors should not impact that plan. You know the steps you're supposed to take and when you're supposed to take them. So if you are in litigation right now with somebody, while it might psychologically mess with your head, you have the rules in place. You're not going to do X, Y, and Z until these conditions are met, so it really shouldn't bother you. If you find that whatever the situation is in your life, William and anybody else, that you're in a situation where you're not executing your plan, you're completely sidetracked, you're flustered, you're just not happy with the way things are going, and it's impacting your trading, then you need to stop trading. You have to fix one of those situations. But, for me personally, I've dealt with a lot of adversity while trading, long-term and short-term, and I've never really had an issue where it got to me. The worst thing I would say for me personally wasn't an external event, but it actually was happening in trading. I would go on a losing streak, and that just kind of manifests and gets worse and worse and worse, and then you start to feel dejected, you feel stupid, you feel like you can't do this, and then next thing you know, the downward spiral of losses just accelerates. That to me was much tougher. That's one of the toughest things I've had to deal with. But external events, people, I'm not feeling good or whatever, you shrug it off and you just follow the plan. And again, if your elements are bugging you too much, whether that's litigation, you're fighting with your significant other, going through a divorce, you're whatever, if you find that it's impacting your trading and the results are evident, then stop trading, period. That's it. When I went on my really bad losing streaks, I'd take time off, and it happens. I think everybody here is going to go through them probably multiple times, and you'll go through them the rest of your trading life where you just seems like everything you do is wrong. And you're like, but wait a minute, I've been doing this successfully for so long. And all of a sudden, you're just getting your butt kicked daily by the market. Like, how is this happening to me? Don't worry. Step back, analyze, see if there's something that you might have been missing. If not, go back and do the same thing every single day. I like to use the example of Derek Jeter, who is probably one of the best pure baseball players of our time, other than maybe Mike Trout. Derek Jeter, over the course of his lifetime, batted .315, and he'll go straight to the Hall of Fame, first ballot Hall of Famer. I believe he had a hitless streak where he went 0 for 36, I think, which if you look at his historical track record, that almost seems inconceivable that he could miss that many, 36 at-bats and not get a hit. Did he do anything different? Think it got in his head? Think he was doing something different? He went out there and he just said, do what you do. You know the swing. Something, you're just a little bit of miss right now. Maybe it's the pitchers, who knows? And then he got back on track and finished. I think he finished that season at .314, even after going 0 for 36. So, for us, I think that's the key, is you're going to go and continue to do what you do well, analyze what you're doing wrong. If you don't know what you're doing wrong, then you really need to step back and evaluate. Because if you don't know what you're doing wrong, then you're going to continue to make those mistakes over and over and over again. Dave said, it feels like you're talking to me. I go through streaks that are opposite of... Sorry, Dave, I'm laughing with you. You're not alone. I mean, if you were to go through the halls of everyone who has tried to make a living at trading or is making a living at trading, every single one of them will say that. They'll say they've all gone through that period of, woe is me, I'm the dumbest person on the planet. How could I be so stupid? And, the big problem for me in that type of situation, Dave, is when you go through that period of losses, where it starts to chip away at your psychology and you're like, God, I'm stupid. I can't do this. I'm a failure. Then that will start to manifest itself, right? It starts to build, and then it's like a self-fulfilling prophecy. You just start to get worse and worse and worse. You got to step back and go, hey, I've got the track record that shows I know what I'm doing. I'm in a little bit of a rough patch. Maybe I'll scale my trades back. If you're normally trading, let's say, 1,000 shares, go to 500 or go to 200 just to get your feet back on the ground and psychology rolling. Because if you manifest it and you let that really bug you and you start to feel like a failure, man, it really, really, really will come back and haunt you. And you could lose a lot more than you thought because you didn't acknowledge that something was wrong at the moment, right? Just slow down, regroup. For me, it was take time off. I mentioned my story many times, but I like to go sit by the pool and read trading books down here in Southern California. I'm a people watcher, so people watching the pool in SoCal is usually a good spot to be. A little bit different than being by the pool in Detroit, but we all have our locations and our benefits of where we're at. So there you go. I suck at journaling, but that has helped tremendously. Yeah, funny. This going to sound like a sexist comment, but you grow up. I don't think men journal. Kids aren't taught to have a diary, or boys aren't taught to have a diary. It's a girl thing to do. You're playing with dolls. Go write in your diary. I think that there's benefit to that. You get your thoughts out. You get them on paper, and you should. I think everybody, regardless of who you are, age, sex, religion, you should have a journal, particularly if you're early on and you're going through the ups and downs of trading, because it's a washing machine that will beat you up. So, yeah, I think journaling is a great thing. I talked about this with Dr. Woody Johnson so many times. We have both seen tremendous improvement in traders, not only psychology, but their strategy and overall performance because they are journaling. They're documenting what they're doing. They're saying, here's all the reasons why I got into the trade. Here's the reasons why I got out of the trade. Let's evaluate what could I have done better. What things did I do great, first off? Like, what give yourself a little pat in the back. What did I do right? And then go back and say, hey, here is what I've done wrong on those trades, and try to figure out how you can get better. You're not going to fix a problem immediately, but you can certainly start to take steps to get it better. And yeah, when you feel like the inverse Midas touch, I've been there. Oh yeah. That will lead to revenge trading, which usually means you're now putting your guard completely down, kind of like Tyson Fury did in that fight. And we saw the heavyweight championship fight on, I think that was Saturday afternoon. You know, this guy was getting cocky, and he just put his arms down, like kind of showboating a little bit, like, you keep your arms up. That's how you don't get hit in the face. And he put his arms down, got all cocky, and next thing you know, got popped and cost him the fight. You know, you always stick to the core things you know are going to help you succeed. If you're a boxer, you always keep your guard up. You always keep moving. Don't stand flat-footed because they'll read you, they'll figure it out, and they're going to knock you out. So same thing for us. Always keep moving. Always follow your plan. Always know what you're going to do. And when adversity does hit you and you really get in that pain point where like, oh, man, this sucks. You got to have a plan for what to do in that situation as well. What do I do when I go on a losing streak, right? If I have 3 losing days in a row, I take 2 days off. No trades. 2 days off. Now, I don't usually have 3 losing days in a row. I'm much more disciplined about it now. I don't take a lot of trades. I'll take very few trades, actually, and I'm much more selective on it. So I usually don't take 3 days in a row worth of losses. But if it does, you take 2 days off. It's a punishment, right? It should be a privilege to trade every day. Steve Missick, OT instructor, said he had to go to a psychologist because he was not doing well as a trader. There's a lot of them, right? There was one, her name was Adrienne Togray. She was kind of the popular one for a while. I like Dr. Woody Johnson just because I like his style, and I think he really understands. And he really works down to the mechanics from a psychological perspective, what's driving your decision-making and your thought process. But some people may need that. It has been said that trading is anywhere between 75 and 100% psychological. I mean, that's a bulk of it. It's not the analytics. And what we just looked at with this opening range breakout strategy is the analytics, right? It's looking at just the numbers and the patterns. If I see this little range here for opening 15 minutes, trade the breakout. Simple, easy, done, not hard to figure out. What is hard to figure out is how you react to certain things, right? How do you deal with adversity? How do you handle a massive loss that's chomping at your account right now? That's tough stuff. For me, it's not even about going back to reviews. It's about getting my thoughts out clearly. Yeah. Yep. Yeah, and that's one thing, not to sound like an advertisement, that's one thing I do like about, Trading Academy's XLT, is there's that environment where you can go and you can talk and you can discuss with other traders. And for many times, it's like an intervention, right? You're having so many problems that you just got to be vocal about them. And I would encourage all of you to be that way. Some people have given me a hard time over the years because I don't gloat about my winning trades. I'm not braggadocious. I'm not here going, oh, I make so much money. I don't care. That's, first off, they count money. The money that I make is my business. That's my job. It's not yours. So, but what I can do is, when I'm losing or if I have issues, I'd much rather share my losses with you, because every single one of those losses might be a touch point for you, might be a pain point that you're going through at that moment in time. And here I am getting past that loss and hopefully letting you do that as well by understanding that these losses come. How do we deal with it? How do we move past it? And more importantly, once we get past it, how do I implement steps to make sure that loss doesn't happen again? And as we all know, we'll never be 100% successful. It's just not going to happen. I think Tom was mentioning somebody in here who has 85% win rate. That's in trading. That's amazing. You get to an 85% win rate. That's the upper tier, right? That's what you're aspiring to get to, is some level like that. Now, it's not just the win rate, right? We know that there's your win rate being 85%. However, if you have losses that are 3 times greater than your wins, you'll probably end up losing money in the long term. So it's about risk-reward ratio as well as that win rate. But combining those two together, that's really the key to being successful for the long haul. Let's see what I have. Which is a breakout. Well, you have to go back and watch, Michael. We did the whole show, we're already at 46 minutes. Crazy how time flies. The opening 46 minutes of the show were all about opening range breakouts, so you can watch that one again. Is it possible to separate emotions from trading process? No. It's not possible to separate them. You can't make a trade without having some emotional attachments. What we can do is we can work on curtailing the excitement for the ups and downs of our emotions, and understand that the process is all about getting our emotions to be somewhat stable and not letting them peak, right? That to me, but you can't get rid of it. She has 85 win rate with stops at 2 times loss. Okay, well, So it's still a winning formula, right? Let me go into, let's see, I'm going to call Axofolie if I hear one more D-trick. Where were we? I want to go through our top 8 here, just so I can wrap up, because I didn't realize we were going this long today. Worst performer, by the way, I'm stopped out of my UCO. I had a 33-cent trailing stop. It was I think it's 33 or 30. I forget what. I had it set in the system. I reevaluated this morning. I looked at the ATR on UCO, which is the one that I had long. We had a nice trade on that one, and basically coming off the bottom of the demand zone, and stopped me out, I think, at 32.40. So I got stopped out today at 32.40 on a trail stop. So that was a great one. Happy to be out of that trade. I still am bullish oil long term, but this was not designed to be a long-term trade. It's really a swing trade for this one was actually 2.5 days trading sessions, but was just a fantastic runner. That one worked out really well. Let me show you another couple that happened. So as you guys know, I had some Rivian long, and Rivian closed on Friday at 10.50, and my strike price was 10.50. So in theory, my shares should have been called away. But remember, I mentioned on the show that the person may not want those shares because they could buy it in the open market. There may be a transfer conversion fee to exercise those options. So this morning, my 2,000 shares of Rivian were still there. So I sold calls against my Rivian. I mentioned I may actually do the weeklies. The weekly premium was pretty good. I got 14 cents worth of premium expiring this Friday for the $11 strikes, which is great. So I sold the $11 strikes today, and I also sold the $10 puts again expiring this Friday. I was over 1% worth of premium for just the next 5 days. So I kind of have my own little spread. There's my own special spread going on here, Tom. Where I have calls against my position, so it's a little bit different than a typical, spread trade. But it's a synthetic spread for me, where I have the underlying, and if it gets above $11, I'll get rid of my shares. If it gets down below 10, I will add 2,000 more to my position. And if it stays right where it's at, I'll collect both those premiums and do the whole thing over again. So I'm liking where I'm at with Rivian. I don't expect a huge breakdown here. They're focusing on their cost cutting, so over the long haul, I think this will slowly drift to the upside. So I think I'm okay with the Rivian. The other one was Cleveland Cliffs. So Cleveland Cliffs is out. That is out of the portfolio now. Not worried about that one. And what else did I have? And Snow. So I dumped Snow today. We talked about Snow. Their earnings come out this week. It's going to come out Wednesday. Actually, tomorrow night? Wednesday. So they come out Wednesday with their earnings. I think that's a before market open thing, so I just wanted to be out of my position before then. Otherwise, I kind of like my position, but Tom says baby steps in the spreads. Yeah, I know. It's funny because I wasn't even thinking of doing a spread. It was just like I look back and I'm like, well, it kind of is a spread. I got the puts and the calls on the thing. But either way, so I had a question from Caesar about Ripple, but I don't have time to get into it. Caesar, I apologize. You've been waiting patiently for it. I will message you and let you know. I'll do that tomorrow. I'll do more of a crypto show tomorrow. I got a lot of people asking about crypto, so I'll focus on some of the crypto side of things tomorrow. Let's run through our top 8, though. We had crude oil, which I still like it. It just hasn't really done anything dramatic. Even though it was a little red candle today, down 0.35%, it slightly higher low, slightly more pressure. We'll see if this Iran issue with the president being killed or dying. Nobody killed him. He crashed in a helicopter with a bunch of people. That shouldn't have much of an impact on crude oil, but you just never know. Your dollar index was up 0.11%, so just a slight little gainer. I was actually waiting for it to sell off today just because of what happened on Friday's session, but of course weekend changes everything. S&P was your 6th place finisher. Call it unchanged on the day. Let's see. I have a position on this bad boy where I was talking about if it breaks the high. So I have puts direction. I'm long puts on the S&P, and I mentioned that my stop loss is above the if it breaks a new high. It came within 3 cents of my stop loss today. You had an intraday high of 53.48.25. Well, my number's off the SPY. So there's your SPY. Your intraday high on SPY today was 531.56, and I have a 531.60. 531.55 stop loss on that bad boy. Hold on. Yeah, 531.55 stop loss, and it got within 3 cents of me today. It didn't take me out, so we'll see if I get taken out tomorrow. But that one's still open. Again, my puts that I purchased are out for, I want to say July, so I have plenty of time here. It seems Ethereum ETF is coming. We will see on that one. Maybe I'll talk about that tomorrow as well. This is the question from Caesar about Ripple. So we'll talk about Ripple. Maybe I'll talk about some Ethereum tomorrow. For us today, I still have a couple more things to go to. Here's your 10-year, which has had 3 consecutive really nice bullish up moves. So Big Eb, who's not here today, I'm getting parched. End of the year's coming. Big Eb's going to owe me a beer here. I can sense it. It's coming. All right, close to podium time. Russell was up 0.21%. Technically a quiet, boring day coming off the heels of, the previous session, which is also rather quiet on Friday. Not much happening there. NASDAQ was your third place finisher, which had a nice move today, actually up 0.69%, breaking through to all-time highs intraday, all-time closing highs. And of course, the big news is Wednesday we have aftermarket close. NVIDIA will be reporting earnings, NVDA. That will be a wild one. No clue where that thing's going to go. Maybe we can do a wagering show on Tuesday to see where we think it's going to go. Podium time, that was NASDAQ with bronze. Here's silver medal for gold, like that. Gold got the silver today. All-time high intraday, all-time closing high for gold as well. Driving me nuts because you guys know I had a massive position in silver and I closed out of that one because I had my shares taken away. And man, it just keeps on going today. It was up 0.66% for SLV, hitting an intraday high on SLV of 29.56. Man, crazy to think that my shares were taken away at 23.50 just a couple of weeks ago. That's just insane. And finally, the big move, the big news. This is pretty good. I've mentioned that after the halving, Bitcoin typically goes sideways for 1 to 3 months. It kind of feels like that's going to happen. And then today, we had a really nice move up, really kind of broke out of that slight downtrend that we have mapped out there. I was up 4.56% today, closing at $70,435. So all in all, pretty darn good move for Bitcoin. I'm surprised. I didn't really think we'd see the big momentum move to the upside for another few weeks to a few months. But hey, I'm happy. As you guys know, I'm long Bitcoin, so the faster it goes up, the better. But I would like to see it ideally follow this kind of price pattern here. We'll see if it breaks out and gets up to those levels. I know it seems insane to think that we'll get all the way up to the levels that I've called out, but it could happen. Wait a minute, what level is this? Did someone say $1 million? That's not the level I'm looking at, guys. I don't know why that's at $1 million. Because I think somebody mentioned that there was an analyst like Kathy Wood saying she thought it was going to get to $1 million a coin. Well, this is that's 2.5 million. I don't know why that's up there. Let me put this back to where I think it may go. We are on 250,000, which is down in here. So I have a target of 250,000 by November of next year. And that would bring it to where it looks like this. A little bit more reasonable. There you go. All right, there's 250 and where we are right now. So from current levels, that would be a gain on Bitcoin of roughly 257%, which I don't think is that far-fetched. I know some of you will laugh at that one, but we'll wait and see if it gets there by the end of next year, or by November of next year. All right, as far as economic announcements, holy cow, we're almost at an hour show. Today was a boring day. You didn't really have much other than a bunch of FOMC members speaking. Tomorrow it picks up a little bit, not for the U.S. per se, but certainly for other markets. You have a lot of inflationary data coming out for Canada. They're expecting their consumer price index numbers to decrease. All right, inflation dropping just a little bit. And you can see down here we have nothing really big for the U.S., just a bunch of FOMC members speaking. And then probably the bigger news for the day is going to be New Zealand with their rate announcement. They've had a nice little rally over the past couple weeks, but still longer term trending down. Let me go back to that New Zealand dollar here. We'll bring up our Forex. Here's the NZD USD. All right, fix that. And you can see overall it's been a pretty big downtrend, but the past couple weeks have been a nice little uptick for it. We'll see if that has any bearing on their announcement coming out late in the evening here tomorrow night. This is the first halving with Bitcoin being legitimized by institutions and their ETFs. Yeah, and you're 100% right, Tom. It's like this is different than the last three. It's very different times with this halving versus others. You have so much more adoption. You have the ETFs. You have other factors out there. But you also do have supply has been cut in half. We only have 900 Bitcoin before. Now you're getting 450 created per day. If we get institutional demand for it to continue, I think that will push prices significantly higher. I think that the reason we'll have such a lofty target is it will become more legitimate here after this election and become more utilized, meaning companies can now put it on their books. And I think that's going to be one of the major drivers of it, is when we start to see the Apples, the Googles, the Amazons, the Microsofts say, hey, we're going to have 1% of our balance sheet in Bitcoin. Once that happens, then you'll really see the parabolic move. But I think that'll happen next year. All right, guys, that's going to do it. Earnings-wise, there's really nothing that special with earnings. We had a couple companies today like Palo Alto Networks, which beat earnings, but they were down almost 10%. You had Keysight Technologies. They beat earnings, and they were down as well. Here's what's happening for tomorrow on the earnings front, and I'll wrap up before I get to a 1-hour show. Retail stocks are in vogue this week. You've got Macy's, Lowe's Companies, AutoZone, Urban Outfitters, Home Builder, Toll Brothers would be a good one. And then I think that's pretty much it. Let me sort by market cap here. Yeah, that's pretty much it. So should be a somewhat quiet day. Not a lot of major announcements happening for tomorrow. So that'll do it. Hope you guys enjoyed that opening range breakout strategy. If you joined us late, go back and check out the show. Just a simple overview of a very basic strategy that's rooted around rules. It's about having a framework for this is what I do when this happens, and you wait for those situations to arise before you make your trade. So thank you guys so much. As Lisa says, hit that like button. If anybody here is new, hit that subscribe button, because I just don't do enough gratuitous self-promotion, but hit the subscribe button so you can see when we go live. We go live every single day, Monday through Friday. Unless I've got something going on, from 2 to about 3 o'clock every day. And, of course, share it with other people. And I will see you guys tomorrow. Take care.